So we're here, we're doing a little video. I have Chris and Dave, senior mortgage consultants with 4Front Mortgages, and just wanted to catch up with them, find out what's going on in the mortgage market, because things have really picked up in the resale market right now, and everyone's wanting to know what's going on. So we're just going to have a little chat and fill you guys in with what's going on.
Do it.
Okay.
Yeah, absolutely.
Maybe start with you, Chris. What are you guys seeing in terms of rates and activity for buyers trying to get pre-approvals and getting deals done right now?
We've seen a lot of buyers in the last, I would say, month. A lot of new buyers and a lot of people that were pre-approved maybe last year come back and want to get things updated, and they're definitely actively looking in the market. We're busy. I mean, it's been a pretty busy month, all things considering. I'm pretty happy with that. I thought things would slow, and it seems in the last maybe 2 weeks or so that there's a lot of folks out there looking for places, multiple offers. We've got quick subjects, and it's a pretty frenzied pace, and that is driven probably by rates. We've seen rates since December come down. We saw a bit of a spike right in the thick of COVID when there was a little bit more risk in the financial markets, and lenders weren't too sure what was going on, and nobody knew what to expect if things were going to come to a standstill. And since probably like April 1st or the first week of April, rates have come right back down. So right now for 5 years, if you're putting 5% down on a mortgage, you're down to like the 2.25 rate.
Oh, wow.
Really good. And variable rates are a little lower. So we've seen prime rate drop to 2.45. Bank of Canada came out the other day. They held rates steady. We're not expecting any rate increases until 2022 from the Bank of Canada. So it's a pretty safe bet. If you're going to go variable, you've probably got 1.5 years or 2 years of a pretty low rate. And also on the flip side, going for a 5-year rate fixed they're both great options. And that is certainly driving some of the people to make purchases right now, which, if you bought last year, you'd be looking at maybe 1% higher, which is a significant amount of interest to be paying compared to right now. So I think low rates are a function of kind of a slowdown in the economy, but it's also helping existing homeowners, anybody with lines of credit who's in a variable rate, and then new buyers are certainly benefiting from this COVID kind of slowdown here.
And that's very much in line with what we're seeing, because we've really seen in the last 3 weeks, buyers and sellers have gotten back out there. And I think the factor of people being stuck in their homes for so long has really made them think about where they're living and what they want. And
Absolutely.
The activity has just, it feels like it's gone 0 to 100. So that makes sense with what you're seeing as well.
Absolutely.
Okay. And then Dave, you were talking about the CMHC just made a big announcement yesterday.
Yeah. So it's great news that rates came down for buyers, but then CMHC, they've been talking about this for a couple of weeks, that their concern is that the market is going to correct, that there's going to be a decrease in price from 10 to 15%. So their mission statement's to protect homeowners. So they've kind of tightened the lending rules. So maybe who does this impact? So this will impact anybody who's buying a place for under $1 million, under 20% down payment. So those people need to get default insurance, which CMHC is the largest provider of that. So there's 2 other companies that do it. They haven't come out with any news about doing what CMHC has, but I'm sure that's a day away type thing. So, but yeah, so they came out with 3 changes yesterday. They're all effective July 1st.
Okay.
As with any change, we don't have all the details, but 3 main changes that we see as negative in terms of our clients, first-time buyers trying to get a mortgage. One is they usually allow a percentage of your income to go towards debt. And to keep it simple, they basically said that's a smaller amount now.
Okay.
And so if there's a percentage of your income that goes towards debt, including your mortgage, that's now less. So what's the impact to a client? It's about 10% less purchasing power that they have. So if you could afford a place with a $500,000 mortgage, that mortgage is now $450,000.
Okay.
Yeah.
And that's for people who are writing off, they have to complete before July 1st, or they have to get their approval done before July 1st?
So as we know, or as they're telling us now, any deal, any live deal
Yeah.
After July 1st, these rules apply. So if you've bought something between now and June 30th,
yeah,
and it's a live deal, they can get approved under the old rules.
Okay. And a live deal, what the subjects have been removed, or what's
just that us as mortgage professionals get it in to the lender. Yeah.
Okay.
Yeah. So if you come to us on July 2nd, we have to use the new rules. Yeah.
Yeah. And roughly, I guess, from your guys' experience, how many people do you see in that category, so under $1 million with less than 20% down, that are maxing themselves out right now?
I don't see, I think our clients are pretty, well, and this is just speaking anecdotally, but most people don't really max out as first-time buyers anyways. And there's a few ways that I'm seeing with clients now getting more money from parents to get that 20% down. So if you have 20% down payment, you're not affected by this at all. I would say there's, I don't know, maybe 5 or 10% of people actually go right to the edge of what they can borrow. I mean, in Vancouver, I guess that's a function of kind of a higher price point that we have here in general. But also with rates coming down, I think people now with COVID are being a little bit more cautious anyway. So this is probably just a function of the government saying, we're also going to err on the side of caution. We don't want people going to stretch to the very top of what they can afford, which makes sense. I don't think a lot of people will really be affected by it per se, to be honest. So.
Yeah.
Good.
Yeah, and no, just the other two changes. They've increased the minimum requirement for credit score. So again, without getting into the numbers, if you needed a credit score here, you now need a credit score here. So who's that going to impact? New to Canada, people that are just establishing credit. The younger people, if you've only got one credit card, you might not be building up enough of a credit score to get to that point. And then the third item is they're going to change the rules in terms of what you have for your down payment. So we haven't seen all the details, but basically they let you borrow a little bit of your down payment before. And so what they've said is that you can't borrow for your own down payment. And so that's not necessarily the worst thing, right? From putting a person in a good financial spot. But it's just a change for people, right? Because if that was your plan all along, then this is obviously changing your plan after July 1st. So yeah. Yeah, so they're just making it a little bit harder. Their goal is to be financially prudent, or to encourage financial prudence with Canadians. I guess the takeaway is it's going to be a little bit harder. And if you've had a plan based on the old rules, you need to talk to someone to see what's going on now, right? Yeah.
And it seems like overall it's probably a good thing, right? Because it is a buying with 5% down, and if there's volatility in the market, right, it creates a little bit of instability for that group. Whereas when you have 20%,
this could be also, it could also be a very short-term change too, because I would imagine as we weather the storm and get through COVID and the economy gets back on track, hopefully, especially after the job numbers this morning in the States, there's a record number of people back to work there, which is encouraging. So hopefully, the economy finds its footing. This rule may be relaxed. And as Dave mentioned, there are 3 insurers in Canada. This is coming from the biggest insurer, but there could be some segue between the different lenders and insurers to make sure that there's a little bit of give and take on these new rules. And the government may, who knows, maybe next year we're back out of the storm and onto kind of sure footing, and they make this kind of go away.
Okay.
Hard to say.
Yeah.
And have you seen any other last month or so lenders that are looking for they might have not looked for before?
Yeah, I think the question, the audio kind of cut out there. Was it, have we seen stuff in the last month from lenders that we haven't seen before?
Are they looking, have they changed their criteria at all in terms of what they're looking for clients when they're doing the deal, in terms of stability with jobs and that kind of thing?
Yeah. Yeah, this could be all covered with kind of the COVID rush in terms of lenders. They've relaxed it a little bit, but basically they want to ensure that people are working. So case in point, if you're a self-employed individual, normally we show tax returns for the last couple of years, but those are dated because they're, from last year and the year before. Some lenders are asking to see a bank statement to show deposits still going into your account, to show that you're still actively working and engaged. Yeah, nothing too crazy. A lot of lenders are calling employers to make sure that you actually are employed. All the documents have to be current dated, so within the last 30 days. So, but nothing too, again, they just want to make sure you're working without interruption right now.
Okay.
Yeah.
And anything else to add to that, Chris? I have one more question for you guys.
No, I think, these are uncertain times and these are uncertain policies, but I think everybody's trying to make deals work. Lenders are open for business, rates are low, there's no shortage of money. It's just that they don't want to get a new client that's going to immediately lose their job or go into default. And that was kind of the attitude in I'd say March and April. And now it seems that most folks are either back to work or we're always working anyway. And so from our perspective, it's really been business as usual. And I think as we get through COVID and we start to get the phases of opening here in BC, I think it'll be hopefully something we can look back in the rearview mirror and have kind of a laugh that we went through this craziness. But it does seem to be getting a little bit back to normal per se, a normal spring market, as normal as it can be in unnormal times.
In normal times, yeah. And that's what we're feeling now. Like we're seeing that sales are down about 40% relative to last year, but so are listings and things. Because of that, we have a shortage of inventory, and we're seeing the multiple offers and very similar to what we were seeing last year, but a little bit more cautious in terms of how buyers are approaching, I think, these offers. And the question I have for you guys too, which I don't know if you can answer, but I get it all the time now, is what's going to happen to the market in the fall when people run out of their deferral, their 6-month deferral time frame? Because I think that's the big risk, right, in the economy. Now, we kind of chatted about this briefly before, but, I would assume that if the banks were so quick to bring that in and the government was so quick to save people, that they're not just going to leave people hanging at that 6-month mark if they need it. But just wondering what your thoughts are on that and what you think we might see.
I think that you're right. I mean, the banks aren't just going to say all of a sudden, okay, you have to make your payments effective September. If you can't make it, you can't make it. I think they'll work with people that are unable to make payments. And I think a lot of people probably will have a plan in place. I mean, if you need to defer your mortgage, you're not just going to all of a sudden wake up in September and be like, oh my God, I don't know how I got here. You'll probably, do you sell your place? Do you talk to your parents about borrowing some money? Do you come to us and refinance before then? I think the lenders will have a plan in place so that there's not this just cliff of people that all of a sudden go into foreclosure. And I do think there's a lot of people that probably did do deferrals that didn't need to. And so now they just got a bank of cash and they can probably start making a payment. And keep in mind that whatever you deferred, it's just added on to the end of your mortgage. So you're not going to have, say, 6 months of payments due all at one time. You're just going to, September 1st or whatever date that your deferral stops, then you just start making your regular monthly payment as you would have anyway. So I don't think it's going to be a big deal. And I think by then, hopefully we're a little bit back to kind of full employment and normal, and it'll just be kind of a moot point.
And have there been any stats? Well, I guess it's hard to see, but how many people have filed for the deferrals when they didn't need to? Like you said, some people are just kind of taking advantage of it. Just anecdotally from what you've seen, do you have any sense of people desperately need that, or you think will continue to need it versus?
I think people that were self-employed probably were the ones that were impacted the most. And now a lot of the federal programs are there's the 40 grand tax-free loan. There's a lot of programs that are now in the last probably couple weeks have actually benefited those people. So I would imagine that, that those people may have needed the deferral, but I think most people, just judging from what I heard, that just the bank called and say, hey, did you want to defer? And they're like, okay, great. Why not? Without the necessity to actually need it. Yeah. I know my banker called me and asked if I wanted to defer, and I said that's.
Did you defer?
I did not. No, it's, it's not, I mean, I don't want to pay interest on interest because there's a cost to deferral.
Yeah.
It's not just a free ride, right? So, but it was interesting that I've heard from a lot of banks that they were, or people that were getting approached by their bank to defer, just sort of right when that kind of happened. So it was interesting to hear that, because I think a lot of people got sucked into deferring for not really understanding the reason for it, or kind of like the people that it was designed to help. I think was a very small percentage of people that actually needed to defer, if that makes sense.
Yeah. I think that's what we saw too.
Yeah, I think what will happen in the fall, like there's still going to be government encouragement to our financial institutions to offer deferral for people that need it. Because that's really why the banks did it so quickly, I would think, this time around. I think when these start coming due, they'll probably apply a little bit more. They might require a little bit more from clients to prove that they need additional deferral. Like, people will absolutely still need it, right? So it's the right thing to do for those people. I don't think it will be like Chris said, like the bankers won't be calling clients and saying, you can defer, you wanna. I think there'll be a bit of a process. So, but I think it'll be like, people still will need it. So I think the government will support it.
Good. Yeah, I think that's really helpful insights here. I think we're good. I got all my questions answered. Was there anything else you want to cover, or you think we should cover for people out there right now that they need to know?
We'll put a little bit of a little post on our social media today about the CMHC thing. So if people want to just check our Facebook page out, or what have you, or Instagram.
And your Instagram's at 4Front Mortgages,
at 4Front
right?
Mortgages, yeah. And Dave and I have we have a Facebook page. We'll put the details on there. If anybody has any questions, they can always reach out. But I think the main thing is, if you're looking at buying a house in the spring or summer, that definitely talk to your mortgage consultant about how this could impact you, and make sure that you have your kind of pre-approval. It's firm, and you're aware of the implications of these rules effective before or after July 1st, because it will inevitably, some people will sort of slip through the cracks probably. And whatever they were told by their bank in, say, March, come August, isn't going to be the same as what they thought it would be. So.
And how soon in advance do you guys encourage people to come talk to you before they're looking to buy? I always tell people right away.
Immediately. Yeah, absolutely. There's no point buying or going to waste anybody's time if you're not approved for what you think you can shop for. And there's lots of ways we can help people sort of navigate through the through some challenges. If there is challenges in an application, there's lots of solutions out there.
Awesome.
Perfect.
Thank you, guys.
Thanks for hosting, Adina.
Yeah.
Thanks, Dina.
And have a great weekend. We'll see you guys soon.
Yeah. Take care, guys.